I'm now joined by Peter Andersen of Andersen Capital Management. Peter, hi, thank you for joining us. Can I start by asking you, if I may, about the potential contagion from a slowdown in China, as we're seeing, as I said there, yet another tightening of COVID rules there?
Absolutely. A lot of investors have been watching very closely the developments in China. And with every little bit of information that comes out of there, of course, the market reflects that. So the fact that there may be some setbacks is of some concern to Chinese investors here in the United States. Also, the fact that the data sometimes is fragmented and isn't totally consistent gives us some cause for worry that we might not be getting the true picture of what is going on in that country. So that adds to the confusion of an investor looking to invest in stocks that might have considerable exposure to Chinese revenue.
As, of course, concerns growing of a global economic slowdown coming in the new year, do you think a soft landing is still possible in the US? We get the minutes from the FOMC tomorrow, of course, where we'll have some more insight into what policymakers are thinking. But what's your feeling?
Yes, well, I'm smiling because that is the big question here in the United States. I would say it definitely even eclipsed the Chinese question that you asked earlier. So we are looking at every little syllable that any federal official utters for the next 6 weeks. And because of that, that causes the volatility in the US markets. I do think that given the last Fed statement, they will tend to slow down their hikes. I'm thinking that they will probably raise only 50 basis points at this next meeting. However, that is the general consensus right now in the United States, and one has to double think this because the Fed is certainly aware that that's what we as investors are thinking, and that might complicate their decision, don't you think? Because they're very cautious about giving too strong a positive signal to the equity investors. And if you've noticed, equity investors are still optimistic at their very heart. And so if they see any little glimmer of positivity, I think the Fed is concerned that the market might get ahead of itself. So it's a complicated matter. Now, I've just been talking about the psychology of this. Of course, the hard facts are the data. And as the data comes in, that should drive the Fed's decision overall.
Can I ask you also about another one of our big stories, something that's been very volatile over the last couple of weeks, crypto? What do you make of the contagion from the collapse of FTX? Do you think it's time for regulators to move in the States?
Well, I have always been an outspoken critic of crypto. And the main reason has been, I think we have invented the most complex investment instrument to date. I mean, this even is more complicated than, say, collateralized debt obligations that were introduced in the 90s, mortgage-backed securities, any kind of options instruments. So number one, the asset class, if we can call it that, is extremely complicated to understand. Then layer on top of that this latest scandal, and it has almost all investors scratching their heads because if they didn't understand crypto before, then this adds to the complexity. And the question of regulation, some are actually saying maybe it shouldn't be regulated and just let it burn to the ground. That is a very aggressive interpretation of what's going on, but I do think that it will gain more support because most investors have no idea how to value crypto. If you've heard people talking about the proponents of crypto, they never have answered the question, how do we put a value on, say, a single share of Bitcoin? So those things are ongoing. And now I do think the contagion is very, very possible. However, I do think it will stay within the ecosphere of crypto itself and not spill over to, say, the US banking system.
Well, thanks so much for joining us, Peter Andersen of Andersen Capital Management.